Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Wednesday. Hope it finds you well. It's the Pro-Am at the Waste Management Open. The Super Bowl just days away, and then I guess the holiday season will officially be over. But speaking of wishing it was over, Nikki Haley, Jason, I don't know if you saw this. Nevada's doing something weird. You know, all these election stuff. It's enough to make your head spin. But they had a primary election yesterday that apparently doesn't count. And then they're going to have a caucus, which is going to count. But this one, Donald Trump wasn't on the ballot. But you had all the, most of the people on there, already dropped out except for Nikki Haley. And she lost to none of the above. It was like a Brewster's Millions. You ever watched Brewster's Million back in the day? Richard Pryor, he had to spend all this money to get a whole bunch more money, and he ran a campaign to vote none of the above. Apparently, that's what they did in Nevada yesterday, and it really wasn't close. It was like 42,000 for nobody, and I think Haley got like 20,000. It's just kind of an interesting thing to tell you just how disillusioned we really are. And it doesn't matter, Republicans, Democrats. There's really no good choice, is there?
What does that say about the love for Trump, though?
Yeah, right?
That's 42,000 people said no Trump, no thank you. And by the way,
no, Trump wasn't on it. Trump wasn't on it. So they were.
Oh, God, okay.
Right.
Trump's not on the Nevada ballot?
Well, he's going to be in the caucus, which apparently that one's going to count. I don't know. What do you mean you have two of them? But apparently they do. But yes. None of the above. I'll take those.
That speaks really well of Trump then, because if he's not on there, then those are all Trumpers. So I was thinking that there's I thought it was the ballot that they were all three on there, which is not good for Trump. But this speaks pretty loud and clear for Trump, doesn't it?
Yep, it absolutely does. 800-951-0592. What does it say about Nikki Haley? Wow. Like I said, it wasn't like it was close, right? It wasn't close at all. And
I should go to Nevada.
Everybody else.
I should go to Nevada and put $100 on Nikki Haley to get the nomination. Can you imagine I bet the odds are so good on that. But knowing that she has a path, if you got to listen to Half Empty Cup of Joe, but there's a path for her to win this thing just by staying in. So, which I think is the only reason she's in it, Joe.
Yeah, allamericangold.com is the website.
None of the above.
And I know, man, I hate talking politics, especially on this show, but I had to do it. None of the above. I loved it. We had Yum Brands out with earnings today. That's Taco Bell, Pizza Hut, KFC.
Yeah.
They missed earnings. McDonald's missed earnings. Starbucks missed earnings. Kind of, odd that I would call those probably the big three of fast food. Obviously Starbucks with coffee, but all of them missing earnings and same source sales not as good as expected. And I think it really is. It's just a sign of the times. Things are expensive, right? And people are just like, man, I just I can't eat out as much as I used to because, well, it just costs too darn much. So, but Wall Street, of course, not focused on that. We got to talk banks. We've got more trouble, I guess, for New York Community Bank. Moody's last night downgraded them to junk. They hired or promoted a new chairman, because that's going to fix it, right? The new chairman. Now, if the new chairman came and miraculously was able to get rid of all the bad loans that they made, then that would do something, obviously, right? But no. He came out and made some very interesting statements that usually, I hate to say, but it's like the kiss of death, right? They comes out telling, oh, no, don't worry. Everything's great. We've got plenty of money on hand, and we haven't lost any deposits from our branches. It was weird how he said it. Was almost like saying, well, they didn't come in and take their money out. But people are speculating that a lot of people are fleeing online. The one thing that makes this different, they didn't have like 50 or 60% of uninsured deposits. According to Moody's, they only have about 33%, and I don't get it, right? I can understand if it's businesses that deal with big money, big dollars. Hey, you're going to have over the 250. You're right. There's just no way around that. But for anybody else, if you have more than $250,000 in a bank, what are you doing? What are you doing? That's just not where you need to be or want to be. And now it's spreading. We had the Japanese bank say we had problems today, this morning. German banks. It's going to be all banks around the world, except for, I guess, would be the really, really big banks. But once again, more pain in commercial real estate and the regional banks of the world. Patriot Radio News Hour. Jason and I will be back right after the break. (800-951-0592) Patriot Radio News Hour. Joe and Jason here on this Wednesday. German lenders now in turmoil as well, as their banks are owning up to losses in the commercial real estate markets. And again, globally now, New York, Japan, Germany, right? It's just, and I think as all these other banks that come on board with earnings, all these losses are starting to have an effect. And when we look at what Moody's had to say, they were starting to talk about the once a $3 trillion asset class. Offices are now probably worth $1.8 trillion. I'm sorry, that wasn't Moody's. That was Starwood Capital Group's. Their chief executive officer. And again, this is the debate, Jason. How big of a loss is it? Right? Is it 40%? Is it 50%? Is it 60%? How about this? Canada's public pension fund had a $71 million investment in some office space in New York. They wrote it off at $1, a single dollar, just to get rid of it. They're saying that the big thing for Moody's, there's $1.2 trillion of losses spread somewhere, and nobody knows exactly where it all is. The company's elevated use of market funding may limit the bank's financial flexibility in this current environment. Moody's pointing out, Jason, it may be hard for these guys to get money. Right, because, obviously now they're the pariah. They know the people on the inside. They know that they've been at the Fed window. They know they've been using the bank bailout facility. And now the fact of the matter is it may be impossible for these guys to raise more liquidity without having to do nothing more than straight asset sales. And let's face it, we know what these asset sales are going to be. It's going to be at least a loss of 40%. or more, and it makes a lot of sense to see Moody's downgrade them into junk. By the way, the stock down another 12% today. It just doesn't seem to end. And to your point, is this going to be a bank taking over this weekend? I don't know. Right now, it's going to be, it will really depend how many more depositors do they lose. They're saying that they're not losing that many, but the wording wasn't very clear. They said they weren't losing many from the retail branches. Instead of saying, hey, we're just not losing any, right? Because let's face it, most people now don't go into branches, right? They can do this stuff online.
Yeah, well, and a lot of those depositors probably don't know that they're stressed at the bank yet. I mean, it's not like they listen to this show. You know, it's not like that they're paying attention. A lot of the smaller depositors aren't going to know this stuff, but the bigger ones, you better believe they know it. You got millions of dollars at stake. They're going to know. They're just going to know, and it's just going to get worse. The whole thing is when a bank run starts, it's always one guy who tries to save his family, save his buddies. Well, then his buddies got their buddies they want to take care of, and then it goes very quickly. And this is Wednesday, so what do you think by Business Day Friday, how the frenzy could be if the bad rumor spread? And here's the other thing: there's so many fewer institutions financially in America. You know, the reason that some people might be listening, why does it matter if there's one bank in New York? I mean, yeah, I know it's right. Bad. There's contagion. There's always contagion. You know, these companies, these banks, they all are intertwined with their investments, and when the weakness of this bank shows, it weakens anybody that has anything to do with this bank, and then that spreads to the next level. And this is why there was such fear last year when several banks went down. It's, you know, Joe, it's like a slow motion giant being tripped right now. You know, he's instead of just falling flat on his face, he comes down to his ankles and his knees, and then he comes down to his waist before his chest hits, and then finally his head hits the ground. It's just one piece at a time, right? That's what we're looking at. You know, last year was somebody stuck the leg under the giant, and the giant just started to trip. But now, I think 2024, the giant's going to come down to his knees, and it's just going to keep happening. I mean, in 2008, 2009 through about 2012, 500 or 600 banks closed down, and in the first year it was 3 or 4.
Right.
See? Yeah. Contagion, yeah. Right?
Yeah, and then you look at auto loan delinquencies. Wolf Richter, he does such a great job, especially in certain areas, autos specifically, talking about the delinquency rates hitting a record high. And kind of just staying there now in 60 days more or past due. This is going back. This is taking out the highs from 2008. New auto loan delinquencies that are 30 days. This is new auto loan delinquencies, the highest going back to 2010. Almost now hitting 8% on new auto loan delinquencies. Serious delinquencies again bumping up on these highs last seen in 2008, 2009, above 5%. And Jason, this is just another little thing, right? It's one more thing. We talked about credit card losses now, credit cards having to be written down, auto loans having to be written down, and now, of course, which we already knew about, the commercial real estate having to be written down, but it really is something we got to keep a watch on. You know, we talked about it yesterday. Credit card delinquencies rose 50% last year. And so the amount of write-offs or you know, seriously delinquent now, it really is something where these banks now have, well, gosh, we got commercial real estate problems. We've got credit card problems. We've got auto loan problems. And again, remember, with the greatest economy that we've seen, at least in recent memory, according to the data, with GDP data, and all of these things being written down at the same time because of the banking crisis, because of what happened last March. More and more companies, more and more people are doing a better job of keeping under those thresholds, right? They're not leaving billions of dollars in the bank because obviously we know what's going to happen. And how many more times can these big banks write checks for billions of dollars to try to keep the FDIC insurance fund up to snuff? And this is something where Jay Powell on 60 Minutes, that's why, I mean, he flat out just said it. Oh, yeah, more banks are going to close and more banks are going to be merged out of business. Yeah. And I think this is the start of it.
The only minor problem with having your stuff in many institutions, so if you're, I'm not talking about most of our customers, the average guy, but these big financial institutions having, I don't know, how many banks do you think they're using, Joe? Dozens, maybe tens of banks, But by spreading it out, and then you get this contagion I talked about earlier, your chances of having a poisonous bank, your odds is like the lottery. The more tickets you buy, the better shot you got, right? So what's going to happen when the FDIC insurance isn't enough and we have enough banks closing all at once? And you're exposed to more of the banks. Yeah, maybe you're in all the big banks, but you can't. If you're trying to protect your money, Joe, you can only have so much, right? So it's there's a little bit of a shell game there, which you don't know which of these banks. Actually, I guess maybe somebody knows which of these banks. Like you said, they have all these places, all these depositories where the Fed can monitor who needs it. I guess they probably know who's going weak.
They go to the big banks, right? That's what they're going to do. This is going to consolidate even more money into just that small handful of banks. So the people that appreciate, that working relationship with these smaller banks, they're the ones that go into the bigger banks, right? Hey, I'm now a small fish in a big pond, and I'm not getting the service that I was getting when I was at the smaller bank, and I was I was a big deal. Those are the things that really are affected, because a lot of these smaller banks, right, with big depositors, they give them great deals, right? Really great deals. And you know what? Now they're probably like, well, you know what? I know it's a great deal, but it ain't going to be a great deal if you go under, and I got to do things. How about this? Here's another one. Last year, in January, there was a record 31,176 recorded bankruptcies. This year, 36,607, a new all-time record. Filings were up 17%. As well as individuals and commercial filings increasing year over year. This is the 18th straight month in a row, Jason, where individual and corporate bankruptcies rise. And again, somebody's left holding these bags, right? We're talking about this. This is the write-downs, right? Of these individuals, right? This could be your car loan. This could be your credit card balances, right? It can be all of those things that affects the banks. Individual bankruptcies, 34,515. 29,448 of those were individual filings. There was another 19,590 Chapter 7 filings, right? That's your business side. That was up more than the individual side. Business bankruptcies up 25% in January of this year. Overall, commercial bankruptcy filings were up 21%. Jason, it didn't matter where you looked. Everywhere in the bankruptcy filing categories, all the categories hit new records in January.
Wow. Yeah. And earlier you were talking about car loans and then things, all these delinquencies hitting record highs. It's not. This is obviously when you come onto the show, you're not going to hear a lot of good news, because there's not a lot there. But this is why we do what we do. Joe and I sell gold and silver because it's the best way to insulate, to isolate you from the bad news, right, Joe? You got to put yourself in a stronger place. We're going to keep hitting people with the bad news all the time because for the years that Joe's been doing this and the years I've been doing it, there's a lot of reasons why you should be out of the traditional banking system. So we're going to keep telling you, here's another piece of information. Here's another piece of information, right, Joe? And it just keeps on going. Now, the banking institutions were getting stronger, and they figured out an honest, decent way to help the citizens of America. We would tell you, hey, look, things are a little rosier. Some common sense has hit Washington, D.C., and now the banks are going to stop being so greedy. We'll see it, right, Joe? We'll see it if that ever happens. It's just that, unfortunately, everybody's taking care of themselves, especially those at the top.
Listen, the S&P hit a new record high today. Right, so we have more banking problems. We had Yum Brands miss, right? But we had bankruptcies hit new all-time highs, and stocks are at an all-time high. This is diversification is the name of the game here. This is kind of the that bubble melting up where it's just a handful of companies that are worth all the value and everything else is kind of not. Patriot Radio News Hour. Buy it before it bursts. 800-951-0592. A quick look here at the markets. The Dow is up 160. The Nasdaq's up 33. I'm sorry, the S&P's up 33, 49.87. So almost 5,000 on the S&P. The Nasdaq is up 100 points. Gold is up 2,040. Silver, 22.50, up a couple of cents here. The 10-year note at 410. Crude oil's up. Crude oil inventories. Big draw in distillates. Remember, we were talking about distillates the other day. But being diversified here, we've got, you got to be in stocks. We always say that all the time, right? That's what you use Joey for, right? Your 401ks, your IRAs. But this is going to be a very, very volatile 2024 and beyond. I think it gets a lot harder here on this next downturn, maybe the hardest one we've seen. But check out our friends over at Y Refi. You get a fixed rate of return up to 10.25% fixed rates. Heck, if you just want to do 1 year, they'll give you 6.5%. I mean, that's pretty solid. But you get up to 10.25% fixed rate of return, not correlated to Wall Street. Right? I mean, you can take a part of what you own and like, man, I don't have to worry about this little piece because I know what I'm going to get every month. You can turn your income on, you can turn it off. I've told you this 1,000 times. Check them out, investYrefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-Y-REFI-24. And Jason, Catherine Austin Fitz was out again with another warning, talking about the federal government. I mean, she wasn't playing around. The federal government being run as a criminal enterprise, according to Austin Fitz. And it's not just a little criminal. It's a lot criminal. Talking about the states and the need for states to protect the citizenry against the dollar, and talking about creating sovereign state banks, that more banks need to go and create their own depositories and put gold and silver in these depositories to protect their own citizens from the federal government, and talking about the government is going to be taking financial transaction freedoms away from the citizenry, and we're going to be losing all of our freedoms, and that they're, according to what she says, Jason, a serious loss of confidence for the U.S. federal government and its ability to keep its word, right? Now, maybe taking a shot with, if you really knew what was going on with Ukraine and all that, we really didn't have the white hat on, and I think a lot of nations no longer respect the United States. She kind of just like we did, talked about how many countries no longer want dollars for oil. For a lot of people, they may sit there and say, well, guys, it's just one thing. I mean, it's just oil. Oh, no. See, what people don't know, and they don't want you to be educated about this, by the way, oil is the most dominant commodity in the world. It dwarfs all others. It's not even close, right? Corn, soybeans, steel, iron ore, gold, silver, you name it. They're little fish compared to what crude oil is. And it's such a big factor in demand for treasuries. And Austin Fitts is saying that, listen, the dollar system has been managed in a very corrupt way, and right, we use it as a weapon, and saying, hey, the diminishing of the trust around the world is going to be reflected in these treasury markets. And at the same time, we just had a vote in Nevada where the citizenry voted for no candidates. And we've got the election coming up, Jason, that I think for a lot of people, it's going to be unsavory candidates for a lot of people.
Yeah, the federal government once did get rid of its central bank, the criminal cartel. That was Andrew Jackson. And what did he do with federal deposits? Because he pulled them. He pulled them from the second bank of the United States. He put them in sovereign state banks. So the federal money, whatever money the federal government had at that time, he just put them in. Because even though back then we didn't have digital currencies and easy ways to move money around quite like today, it was easy enough to just deposit the monies into these other banks. This is what you have branches for. And the state banks ran their economies. And he paid off the national debt. No income tax, no federal income tax, which is part of the criminal cartel that Catherine Austin Fitts is talking about. It's already been done before. So it can be done again, Joe. It's just
it can be done again, absolutely.
The appetite and the education of the citizenry of America is just too small to do it.
How about this, right? You think all these programs that the Federal Reserve has created, no, they created their own problem. The Federal Reserve, in its preliminary income and expense reports for 2023, revealed an unprecedented $114.3 billion loss. So the Fed, it's selling its balance sheet, right? We went from almost $9 trillion to $7, just under $8 trillion. Okay, so we've sold a little over $1 trillion off of their balance sheet at a loss of over $100 billion. The Federal Reserve essentially lost more money than the FDIC even has, right? About the same amount of money that the FDIC says they have for insured deposits. And the Fed seems unconcerned about it. Well, it doesn't matter. Like anything, we're not like you out there. We don't have to do anything about this. We can report losses for as long as we want. But Jason, it's a trust factor. Right? What is this saying to everybody else out there? Which is, man, do I even want to buy treasuries? Because if I do have to sell them, if something does come up, I got to take losses. Yeah.
The Fed never has to worry. The Fed never has to worry about losing money. They just print it and loan it out. There's no losses for the Fed. The Fed never has losses, Joe.
It's a deferred asset. See, no loss, just deferred. Well, we'll defer to a commercial break. We'll be right back. (800-951-0592) Patriot Radio News Hour, and today got the news that gold supplies are getting extremely tight. $5 liberties, we ran those on sale yesterday. They are unavailable today. $5 Indians didn't even get a price for $5 Indians. Got the, hey, call us if you have some. These are the largest wholesalers in the entire world. $20 gold has been, tough to come by. One guy offered me 10, one of those, and said, hey, I got 10 of them. And I'm like, okay, right? That's normally it's 100, it's 200. Things are getting tight. The one place that there seems to be supply, $10 liberties, 1 through 9, $1,110. 10 or more at $1,100, and we've got 100 of those. And then, Jason, we're going to have to see, because it just feels like premiums are going to start moving back in that wrong direction again. We had really high premiums, in 2021. The first half of 2022, they've come back in. They came back in 2023. And now, all it takes is one bank to kind of scare the markets, and next thing you know, everybody's running for cover. $10 Liberty gold pieces, 1 through 9, 1,110. 10 or more, 1,100 at 800-951-0592, and we're just going to see. I think this is kind of the new reality here as 2024 goes. When the people get nervous, when bad things happen, they're going into quality. They're going into these gold markets, and Jason, they're going into them hard right now.
Yeah, well, they've been doing it for a long time, but the last few years, except for a slight hiccup last year, which is almost record highs, are the other buying. All the biggest players buying. This is what you do when a reset of the economy, the economic system is going to happen. They don't say you will own nothing and be happy for nothing, right, Joe? They say it because they're making sure you're preparing yourself for losing. And I'm telling you, all the small businesses, it's continuing on. Every time I talk to one of these guys, they have less customers, less business, less money coming in. I mean, we'll have to do a show just on the Depression, but the major part of the Depression, which was very interesting, was that people just didn't have money. They could still earn money. There were still businesses that were open. It was so tight. There was no money available. The banks, the central bank, tighten the amount of money available to everybody. You had really rich people, Joe, because you keep talking about you don't have your money in the bank. You had really rich people that were exposed to the bank. Those banks closed. They were poor. They were in the bread lines. It happened that quickly. Go back to Andrew Jackson's time. It wasn't so much that there wasn't growth in the country. This was the 1800s. America was still exploding with growth, but nobody had any money. The banks decided, if you don't love our central bank, then we will show you pain and suffering. And Andrew Jackson stood up to it, got rid of them, and then America became massively prosperous. But, the central banks, like you state banks, you can't print money. Only we print the money. Only we coin the money. Well, Joe, Catherine Austin Fitts is right. A sovereign bank prints its own fiat currency. There won't be a constriction. And if you print too much, that state bank will go into inflation. People won't want the currency. I mean, I'm not a big fan of fiat, but if you're going to do it, don't borrow it into existence and pay interest on it. And that's what we have, Joe. We have a lack of money, and business can't do business if there's no money. Back in Andrew Jackson's time, the businesses of the time were so sick of not having copper coinage available. The penny was a large coin about the size of a quarter.
A large coin, yeah.
The businesses just started making their own coins, and nobody got in trouble. There was a lot of shaming. You shouldn't be coining money. Why? Why don't you coin the money then? And so, this is how Andrew Jackson and the people of middle 1800s America, 1830s, just washed away the central bank and got rid of it. It's just that people don't understand this. Money has been turned into this so-called complicated discussion, and it really is not. You just have to investigate into it. You have to learn about it. Take some time.
Right.
It's an important thing to know about, right, Joe?
Well, let me tell you, the people that make decisions for countries, they know. Look at the amount of central bank gold buying that's occurred. And it's been nonstop since the financial crisis. And now it's just records, right? Just crazy amounts of gold being bought by central banks. Crazy amount of gold. Think about almost 4,900 metric tons of gold last year. That's insane. That's an insane amount of gold to be consumed. And guess what? I think it's going to be over 5,000 metric tons this year, right? And mine supply, what are we, 3,500 metric tons, right? How much scrap can you make up here? But what you really need to be focused in on is, why is there this demand? And Catherine Austin Fitts was kind of saying, listen, people are losing confidence in the dollar in the United States. And obviously, listen, everybody knows, kind of like a joke, right? We're going to pay back all this debt. The Fed, we had a $114 billion loss, but it's just a deferred asset. It doesn't matter. We'll worry about it later. Countries are worrying about it now. Investors are worrying about it now. And that's why they're putting gold away. It's simple. That's really it. It's a simple equation. And guess what? They're doing it in all the other countries. They're doing it with the sterling. They're doing it with the euro, with the yen, right? The renminbi. They're doing it everywhere. Fiat money, right? That's kind of what we're talking about. Getting ready to come to an end. Patriot Radio News Hour. Final segment coming up. (800-951-0592). Final segment here on this Wednesday. $10 liberties, 1 through 9, 1,110. 10 or more, 1,100. As the $5, both the $5 Liberty and the $5 Indian coming off the board with the wholesalers, as again this supply starting to tighten. The $20 gold market has been tight for quite a while, and it just kind of makes sense, right? That you start going after these other things, and I'm not surprised, right, with the fractionals, the smaller fractionals going off the board next, right, Jason? People want diversity, spendability. People are worried about the next system, right? The central bank digital currencies, and we know, right, the Bank of International Settlements, the IMF, right? They're all preparing and getting their documents out and telling us, oh, don't worry, privacy. Listen, there's nothing private about a digital transaction. Nothing. It's out there somewhere, right? There's a record of it somewhere, right, Jason?
Yeah, and I think on top of all of that, Joe, the customer that had the $1,200 or $1,300 was buying $20 liberties, their income may not have increased in the last bunch of years as much, and they still have that $1,200, or so set aside for gold, and now you're getting a $10 liberty, and go for it. Get that $10 liberty, because pretty soon $1,200 is going to only get you the $5 liberty. So keep that in mind. Your dollars are frozen in place. The amount of gold you're getting for those dollars is decreased substantially just in the few years I've been involved with Patriot, Joe. I mean, we were selling $20 liberties at $12.50, in 2018, 2019. And then now we're in the 2000 something range. And what are these on sale? The $10 libs. It's about the same as a 20, Joe. So this is what's going to happen. Pretty soon, $1,200 will be a $5 Liberty, Joe.
Yeah, and I was just looking at the markets. We're talking about all-time record highs, and yet there's just as many stocks hitting new lows as there are new highs. Yep. It's a really weird market out there, and it's something where when we talk about why does gold rise, what is inflation, it's actually not complicated at all, right? It's just the printing of money. And look at what we just talked about. Our federal government, $2.5 trillion more than what we're taking in. The Federal Reserve, we just lost $114 billion, but don't worry, right? It's fine, right? It's just a number on a balance sheet. We're not really, telling you it's not a real loss. Somehow it's a fake loss, right? And of course, what does that tell you about the money? Right? What does it tell you about the money? If it's just a deferred asset, right? Well, okay, so I guess what you're telling me is, right, the money's really not worth the paper it's printed on. That's essentially what it is that they're saying. And it's one of these things, Jason, where this is what happens, and everybody in Wall Street, all they can talk about is rate cut, right? We want rate cuts. And they're happy that banks are struggling again because they think that'll mean rate cuts, right? Because what do they really want? They want more money printing, and it's a great recipe for gold and silver. 800-951-0592. Jason and I, we're coming right back with the Half Empty Cup.